Hey, this is Ane, welcome back for another video on this channel. Today we will have a look at the simple one candle scalping strategy by Scarface Trades. So we will not only have a look at the strategy, but in fact we will write the code for this strategy, so you can use this strategy completely automated in your own account, or you can make back tests and figure out if this strategy might be for you.
This video is presented by BM Trading. Learn to code your own expert advisors. Link in the description.
So what are we talking about? We're talking about this video here. It's uploaded on the Scarface Trades YouTube channel. I don't know the person personally, but what I appreciate is that, different than many other online gurus, he is showing the strategy and he is explaining it pretty accurate, which helps us to code this strategy in a automated expert advisor for the MetaTrader 5. Still, there are some assumptions that we will have to make, and it's not like a perfect representation of the strategy, because if you watch the video, and if I do not forget, I will link the original video in the description. So if you watch the video, you will realize that there is some like interpretation needed to figure out if a breakout has like enough momentum to be traded, and this is something, of course, we cannot really put into the expert advisor, because there is no explanation how this momentum is identified. It's just more by feeling, I would say. But besides this, it is a strategy that we should most likely be able to code here. And how does this strategy look? It's a strategy which is actually kind of similar to my own range breakout strategy, but the time when we trade is very specific, because here we trade in the first 15, or we base our trades on the first 5 or 15 minutes of the US Open. I think in this video tutorial I will focus on the 15-minute candle, and the idea is after the US markets open at I think 9 or 9:30 in the morning, then we want to check the next or the first candle after the market opens. So for us, or for me in this case, the US markets will open at 16:30 or 4:30 p.m. because my broker uses GMT+2 time zone. So at this time we will then, and I will have an example here for USD Japanese yen, for this time we will then check the, wait, let me find it here. Then we will check the first bar. So for example here it will be the bar from 16:30 to 16:45, the first 50-minute bar, and then we will trade the breakout. Yeah, that's pretty straightforward, so really easy. As I said, it's similar to my range breakout EA. We do have a high and low of this one specific candle, and then we trade the breakout, and that's what we can do every single day. And he says we can do it in pretty much every underlying or symbol. So he often talks about stocks, but I think we can also use it for Forex or index CFD, so probably also gold. And also, like, we do not trade the breakout right away, but instead we wait for a retracement, and this is what we can also see here in this picture very easily. So you can see here the highest and lowest point is then marked and will be remembered when the breakout happens. And if the breakout happens, we then do not enter the trade immediately, but instead we will check if there was a breakout, and then if the price goes back to the high or low of this candle, then we will trade the breakout. If you have any questions about the strategy before you watch the coding part, maybe you want to watch the original video here on Scarface Trades YouTube channel, but in this video let's focus on the coding part. So let's not talk too much and let's jump right into the IDE, the Integrated Development Environment, here in the MetaTrader 5. And let me close some of these. So what we want to do is, in the upper left corner, we want to click on New, create a new expert advisor, and then give it a name. So we can just say simple one candle scalping strategy. I mean, you can choose whatever name you like, and then I will just add the little white T, so I know it's a YouTube tutorial, and then I click on next, and finish, and this will create a brand new expert advisor for us. So these are the 3 basic functions. I do not explain the absolute programming basics. If you're interested to learn more about this, make sure to check out the links in the video description. You will find a complete course on MT5 programming. But for us, we can jump right into action here. So first of all, I said we kind of want to find the first candle after the open of the US markets. So we can go to the on tick function, I would say. And what we want to do here is I kind of want to do this based on pretty much on whatever time frame we choose. So we can create an input for this. Let's say time frame, and let's say period M15, for example, if we want to base it on the M15 chart. And then here I want to make sure that we calculate everything only once per 15-minute bar, and you will see later why. So we can say, for example, we want to have the bars that are currently in the 15-minute time frame chart. So we just use the ibars function for this, and then we create another static variable and also initialize it with the current amount of bars in this chart here. And then we can always check if bars total holds a different value than the bars variable, and if this is true, then we know that we just entered a new 15-minute bar, and then we can update the bars total variable. It's only updated here, and it's not initialized every single tick or declared and initialized with every single tick because it's static, which means that it's only declared once when the onTick function is executed for the first time, and then from this point on it will stay alive in memory, and it's just deleted once the program terminates. So here, this is how we can figure out if there's a new bar. And then next thing is we want to check if we reached the US open time already. So the easiest thing is to use the daytime structure here and then just update the hour to like 16 or whatever it is for your broker. And then daytime minutes should be 30, I guess, and daytime seconds can be 0. The rest can stay the same, and then we have time US open, which is struct to time, and then we just use this daytime structure. Oh, by the way, before we do this here, I also want to store the current time in this daytime structure, because then we get like the current time, like with the current date and the current day of the year, etc., etc. So this will give us the US open time of the current day, and then we can just check if the current time is greater than the US open time, because then we want to check for signals, right? So once this is the case, then actually we want to check if time current is greater than time US open plus period seconds plus the seconds of the current time frame that we use for the strategy right now. But if this is true, then it means that the current time is, in this case, greater than 1645, because in the time frame variable by default there's the 15-minute time frame stored. So if we are if the current time of the day is later than 1645, then we want to calculate the high and the low of the last bar, or in fact we first of all want to find the index of this bar, because this also is valid if we move on in the time, because it's not said that there is a signal immediately after the first bar of a day closes. So what we want to do is we want to find the shift value first, or the index of the trigger bar. So we can say index trigger bar, and this will be I bar shift, because this will give us the shift value of a specific bar in a specific chart defined by a time. So what we can do here is we can use the chart symbol, we can use the time frame from the settings or from the inputs, and then we use the time US open here as a time. So this will give us the index, and then we go ahead and get the high and the low of this bar. So we can just say I high for the current chart, symbol for the time frame from the input variable, and then the shift value is the index here, and then we get the low. This will be I low, symbol, time frame, index trigger bar. So what we now want to see, or what I think makes most sense, is that we wait for a close above or below this. And here I didn't quite get it from the video, but I think it is kind of okay if we just see pretty much any move outside of like the high and the low range here. So we could use the like a 1 minute close or a close in the time frame that we use here. And maybe that's what I want to do. So what we want to do is, since we now found the high and the low of the trigger bar, we can check if there was a close of a new candle outside of this, and then we want to place a limit order to get the entry, right? So what we can do now is we can check the close of the last bar. We'll get this using the iClose function, or let's say a high trigger bar. This makes it a little bit more easier to read and understand. And this is close 1, just the close of the last bar. So symbol, time frame, and then 1 is the shift. So what I want to check now is if close 1 is greater than high trigger bar, because then we want to place a buy limit order at the high of the trigger bar. And if close 1 is instead smaller than the low of the trigger bar, then we want to place the sell stop order, right? So what we want to do here is we say, first of all, before we place anything here, the easiest way, as always, to open trades and send orders is use the trade.mqh file. So we include it here. And then, it's just what I usually do is just create a global trade object here so we can use it everywhere. So now, since we have this trade object, and again, if this is confusing at any point and you need to learn more about the MQL5 basics, make sure to check out my website en.bmtrading.de, and you will find a complete course where I explain all of this in a much more detail and like really beginner friendly. So, but now we have this trade object, so we can say trade by limit. And first of all, I want to do like a really easy version of this, and then later on we can make this more complex. So I created another input variable for the lot size. So let's say the volume is the lot size from the input list, and then we have the price. The price here should be the high of the trigger bar, symbol is the chart symbol, and let's go without TP and stop loss now. And the order time is, I don't know if we specified this in the video, like how long we actually search for entries, but let's say it is specified, and then the expiration time can be specified. So let's say date time expiration, let's say it is time US open plus, I don't know, period seconds. Let's say we wait I don't know, like 3 hours. I mean, you can just play around with this, right? But this is our first expiration time. And then, of course, before we send the order, we also need to check if time current smaller than expiration, because otherwise it would not make sense to send the orders if they're already, or if they should already be expired. So then we can use this expiration variable here, and that's basically it. So let me copy this. Just say instead of buy, we want to have the sell limit, and it's the low of the trigger bar. Okay, so this should be the first product or EA that we can test. So you can see this like a really, really simple version now. We included the trade.mqh file. We have only 2 inputs. We have a global ctrade or trade object, and then in the onTick function we just check for a new bar in the time frame that we want to trade on. Then here we calculate the US open time. We check if the current time is greater than the US open time, and then we find the shift value or the index of the trigger bar, the high and the low of the trigger bar, the close of the last bar, the expiration time that we want to use, and then here we basically just check if there was a close of any bar outside of the trigger bar, and then we send the order. So this is not really like a perfect program. Also, maybe one thing we could do right away, because if this happened once, we don't want to look for more orders on this specific day, right? So then there are multiple ways to handle this. We could, for example, say we create another global variable for this, just say is trade day or something, it's a Boolean variable, so it's either true or false. And here we can say that before we open positions, we want to check if there was no trade on this specific day. And once a limit order is placed, this trade day will be set to true. And then we, of course, at some point have to reset this variable. This is what we can use our date time structure. So we can say, for example, here we could say static int last day or something. Zero, and then if last trade day is unequal date time day of year, then last trade day will be updated and is trade day will be set to false. So this makes sure that once we realize we are in a new day, like usually at midnight, of course, if we reach the new day, then we update this last trade day variable, which is again static, by the way. This is really important. If it's not static, it will not work. And then we reset the is trade day variable. Actually, this one could also be static, but yeah, let's keep it as a global one. And that's basically it. So now we can go to our MetaTrader, open the strategy tester, just click view strategy tester, or click Ctrl R on the keyboard, and then you should find your program here. If you go, let's go with a visualize test, and then we go to simple one candle scalping strategy. We can basically choose any symbol, I think. Let's go with USD Japanese yen, and let's just test for the current year, because I just want to test for functionality. So if the functionality is working, and let's go to the M5 chart, even though the time frame is of course still 15 minutes, but we can see everything perfectly fine, I think, on the M5 chart. So let's give it a go and let's see if this is working. So of course we have to fast forward until we see the damn, I was too quick here, until we see the market open. Yeah, let's maybe wait for the next day. Then also we of course have to make sure that positions are also closed. This does not really look right. So I checked this again, and I think it actually like the logic and the EA is working correctly. It's just in this specific case there was quite a lot of slippage, which makes it look a little bit weird. But let's not focus on this too much, but instead let's add the TPs and SLs so all positions can be closed eventually. So I checked the video, and what he says is basically if there is a signal, so we move outside of this opening range, then we jump back inside of the range, and then he waits for momentum, so he says, outside or that then goes outside of the range again. But this is always a little bit hard because if especially like manual traders talk about stuff like this, there's a lot of interpretation needed, and it's really like there are no rules for this that are 100% objectified. So this is nothing really we can replicate in an expert advisor. Also, another problem that I kind of have here is he says then he will enter in the signal candle, but then also he places the stop loss at the lower end or at the low of the signal candle, and while the candle is still building, we cannot really say if this is the final lowest point. So there are some things I don't like so much about the explanation, but this is very typical for discretionary trading. And yeah, I mean, it's obvious why he can show the trades the way he shows in this video, because of course he is showing everything based on historical data or historical charts. So then it's really easy to trade and find the perfect setup always, because you already know how the trades will turn out. But I mean, I'm trying to build a program here that can be used for actual live trading, and then of course you cannot use these tactics. So we have to find something that is more applicable for actual trading. So what I decided to do here is something that is very simple and easy to implement. We will just place the stop loss at the other side of the opening range, and then we will have a factor for the TP. I know in the video he says the TP should be around the new or the daily high pretty much, but at least a TP factor of 2. So we will leave aside this new day high and we will just focus on the TP factor. So what we want to do here is we want to quickly implement a TP factor as a input. It should be a double variable, of course. Just as the lot size. And then down here, we can now, before we open the position, we can calculate the stop loss. For buy positions, it's really easy. It's just the low of the trigger bar. And then we can calculate the TP, which is also really easy because it's just the high of the trigger bar. And then we add high of the trigger bar minus low of the trigger bar, which is basically just the size, and this will be multiplied with a TP factor. And then instead of 0, 0, we can put SL and TP here for SL and TP, and then we can do the same thing for sell trades, just pretty much the other way around, because here we have a sell trade. So the calculations are a little bit different, but the logic stays the same. And again, for the TP, we multiply with the TP factor. And then, very important, make sure to exchange the 2 zeros here with the actual SL and TP. So once we did this and we go back to our testing environment here, let's have a look at how this looks. So you can see now in the inputs, we can see the TP factor. Let's start with 2, for example. And then if we start another test, we should see that the program does know hopefully exactly what we coded. So here we can see this is it the first trade? I think so, yes. No, it's not the first trade, but it is a trade. So let's have a look at this. So we can see here very clearly that we do have a TP and a SL now. So let's check if the logic here was correct. So we do find 1630 here. So 1630 to 1645, like these are the bars that create the range. Then here at this point, somewhere here, we drop below the range. So we put the sell stop order. The stop loss is here at the other side of the range, this opening range. And then once the price comes back to the breakout level, then the sell limit order is executed. We do have the stop loss and we do have the TP, which is twice the size as the stop loss. So yeah, and we should see this for all of the trades now, which means that at some point all of these trades will be closed. And yeah, this is another nice win. So maybe let's have a look at one more trade, and then we can do also some longer back tests. So here we can see again from 1630, which is here, to 1645 here. This is the upper level of the range. Then there's the breakout. Here we place the order. Order was placed and there was a stop loss. It's now not visible anymore because the order is already closed. But yeah, it hit the TP, and which is then a profit of 2 or 2 times the risk. So that's basically the strategy, how I would implement it here. I mean, it's not 100% of course perfect, because as I said, there are some problems if a strategy is very subjective and needs a lot of interpretation from the trader. And I mean, this one, it does not need like too much interpretation, but some interpretation. So these parts are usually not easy to implement in code, or actually often impossible. But yeah, this is a program that comes kind of close, I would say, or at least is a good foundation or basis for your further programming. So just take the code and make it your own. So you can add more stuff that you want to see maybe in the code. Maybe try to implement the entry logic a little bit better than I did here. So what I want to do now is I want to do a little bit longer back test so we can see how this might perform if we have a look at a couple of years of performance. And yeah, this is how it would have performed theoretically in USD Japanese yen from 2020 to 2025, which is not looking too good. But also this might be because we are trading on a fairly small time frame, and this is when strategies often, from my experience, struggle with trading costs. And an easy way to change this is to just give the strategy more room to breathe, which means in this case we can just increase the TP factor, which should theoretically lower the impact of the trading costs. And here we can see it is actually working. So the performance is still not like shiny and fancy, but it is a lot better than the test that I showed before. So you can see some of these minor changes can really make a lot of difference. So maybe if you add some more minor changes to the code, or if you play around with the settings or try different symbols, you might find something you like. So to finish off the video, I want to explain the code one more time so you know exactly what's going on, and then you can make your own adjustments. So first of all, we include the trade.mqh file, of course, so we have access to the ctrade class. Then we have 3 simple inputs. So the user has some flexibility. You could, of course, increase this list. Then we do have 2 global variables. One is the trade object. The other one is the Boolean variable isTradeDay that we use to make sure that we do not see multiple trades on one single day. Then in the onTick function, we first of all check for a new bar in the signal time frame. Then we do get the current time and store it in this datetime structure, because we use this datetime structure then also to figure out if there was a new day. If there was a new day, we want to reset the isTradeDay variable. This is important, so we do not only see one trade. And then here we update the datetime variable again, or we update the datetime variable so it represents the US open time. Then we take the structure, turn it into an actual datetime variable so we can work with it in our if statements. So here we want to check then if the current time is greater than the time of the US Open plus the signal time frame seconds of 1 bar. So we know that 1 bar already passed. This is important because otherwise we cannot really figure out if there's a signal. Then we do get the index of the trigger bar, the high and the low of the trigger bar. We get the close of the last bar always. Then we calculate the expiration time, and if there was no trade on this specific day and we are still before this expiration time, then we search for actual signals. So if there was a close above the trigger bar, we calculate TP and SL and place the buy limit order with the expiration time to make sure that this order is cancelled if it's not executed, and we update the isTradeDay variable. For sell signals, we do the same. And at this point, of course, I want to say also, it's completely optional if you even want to trade sell trades. It's also a completely valid idea to just delete this whole block, especially if you want to trade stocks, as he talks about a lot in his video. So I could imagine that especially for stocks, you might have a better overall profit or profit factor if you just trade the buy trades, because stocks historically they just tend to go up, or most of them, hopefully. So that's the idea, and that's my interpretation of first version of this simple one candle scalping strategy by Scarface Trades. Let me know what you think in the comments. And as I said, if you want to learn more about automated trading in general and have a complete course, just check out my website. It's ian.bmtrading.de, and you will find everything you need to know about MT5 trading. Even if you're an absolute beginner, this is something I cannot stress enough. This course is really built for beginners also, so you will learn all of the basics that I did not cover in this short YouTube tutorial. So that's it. I hope you have a great time and good trades, and I will see you in the next video. Bye bye.